as you do get the first shots, if you will, in this new trade war. China's already retaliated. Mexico says theirs coming Sunday. Canada put an export tax on electricity to the U.S. The VIX is way up. And Stephanie Link, J.P. Morgan's trading desk today, makes a tactical call. They say U.S. GDP to crater, changing their view to tactically bearish. You changing yours to tactically bearish? That means a shorter-term view of this market.
No, because we've been talking about the growth slowdown for a couple of weeks now. I mean, just a couple of weeks ago, you were at 3.9% in the Atlanta Fed tracker. Now you have negative. No one was talking
negative 2.8.
No one was talking about a 600 basis point decline in GDP, and I just don't see it. Sure, tariffs are a concern. Sure, the parts of the consumer being more choosy. But on the other side of things, guess what? We have gasoline prices are down 10% year over year. You have much lower interest rates. Only about a month ago, we were flirting with 5% on the 10-year. Now you're in the low 4s, so that's good. And I do think that the job market is the most important for the consumer, and it's still fine. It's slowing, but it's steady. Wages are up 5%. And savings, Scott, 5.5%. So maybe consumer takes a pause for a little while. Wouldn't be surprised, but they have savings, right? Delinquency rates are not going sky high. They're higher, but they're still historically low. So there are a lot of things, puts and takes. What I think is the most interesting, up until today, we've had it being a tech sell-off for the most part, right? And the Mag 7 down 11%, with the S&P only down 2. Today, now you have a broadening out. You had the leaders actually correcting, and that's okay too. I think that's where your opportunity is in financials, in energy, especially in industrials, because I'm not backing away from manufacturing and the renaissance that we are going to see here. And the manufacturing industry will actually benefit from tariffs if they bring the facilities here, which is what they're going to do over the long term. So I think there are opportunities. You know, I've been very active in the last 2 weeks. Yep. I have 9% cash. I've been nibbling. We're going to talk about it all day long. And I see a lot of things to be excited about for the longer time.
Yes, this has been, for Stephanie Link, and we will get into more detail, a shopping list moment, if you will. Sure. And she's been a buyer with that list, and I'll tell you some of the moves that she has made. What about it, Josh Brown? As J.P. Morgan also says, the guardrail of risk markets looks to have come off. Barclays today talking about the euphoria in the U.S. is on the retreat, and there is still room to wane even further. You've had $3.5 trillion of value wiped out of the S&P since Election Day. This is not what a lot of people thought was going to take place in the first 30 to 40 days of this administration.
I guess it's weird because this is exactly what they promised us would take place. They said on day one. This is what they told us. So I don't really understand, like, oh, wait, they're really doing this? They did this in 2018.
I mean the moves in the market. You're right. You're right about, obviously, about the policy moves. Obviously, but I'm not necessarily sure that on Election Day, if you would have told people that, okay, the NASDAQ is going to be down 6% by, the second week or the first week of March, you said, that doesn't sound right.
Yeah, no. That part I agree with you 100%. And actually, here's something very unexpected. In the last 50 days, Tesla fell into a 45% drawdown. It's the second fastest 45% drawdown ever in the history of Tesla. The CEO basically lives in the White House / Mar-a-Lago, and yet Tesla has now fallen out of the Magnificent Seven stocks by market cap. Broadcom is bigger. Berkshire Hathaway has a bigger market cap. So does Eli Lilly. So that was unexpected. There's a lot of unexpected things happening. I think the big picture here, when you've lost the Wall Street Journal op-ed page, basically you've lost the business community, and there's just a lot of blunt language now. There's a lot of chaos. I don't think it'll stay this chaotic. I don't think the VIX goes to 50 as a result of this. I think this volatility will be with us for a little while, but I don't think it's a great time to panic necessarily. There's risk-off behavior everywhere in the market already, really fast. 8% of the S&P 500 now has an RSI above 70, which means there are very few stocks in a bull market. you're basically seeing a peaking in 52-week lows. 8% of the S&P are now making new year lows. That's fairly high given what's gone on in the last 2 years. 40% of the S&P components are making 4-week lows. So if you think you're going to be the first person to sell and react to this, you already missed it. So I think the way that you want to think about this is, what are the stocks that are holding up the best right now, not what's getting trashed the most. And so my focus is on what are the best stocks in the market. Where are investors not selling and riding this thing out? Because in my opinion, those are the names where you'll continue to get all-time highs once this volatility subsides. I know there are people with different strategies. They want to buy pain. They want to run into Tesla down 45%. I'm not saying that won't work. I'm telling you what I would be doing and not what everyone else should be doing.
Brian, is it time? And by the way, I mean, heck of a time to have you here, right? You do work for BMO. Last I checked, it's a Canadian-based bank.
It is.
Right?
Yeah, so let me share a little bit about how my morning has gone.
Please.
If that's all right. So we have the very good fortune of running private wealth portfolios for both Canada and the United States. And so we own some portfolios that are a mixture of U.S. and Canadian. I can't tell you how many calls I've taken, Scott, that want to blow out these portfolios, like literally blow these portfolios out and go 100% Canadian, which I think this is exactly the wrong time to do that. That's number one. Number two, working now.
You mean out of anger?
Working out of emotion, out of anger, out of just pure fear, okay? Now, where I was going to go next is being in Canada for 13 years, working for a Canadian bank, but marketing up there as a strategist for a lot longer. I'm not going to tell you how many years. The Canadian market is actually excessively contrarian. Whatever they're doing, go the opposite way. They're typically led by fear, and they're massively macro. Now, what do we know about Canada versus the United States? Many of the economic projections for Canada, just in the last 24 hours, have cut GDP down to negative GDP for the year, 2 full percentage points. And the Bank of Canada, in terms of our own estimates from our great economic team at BMO, is saying that they're going to be excessively aggressive in terms of cutting rates. So what does that mean for Canada in terms of the lending facility? We know that banks are tremendous managers of capital. The banks that are centered more toward on the U.S., I think, are still the place to be. The Canadian consumer is still very prudent in technology. So we think actually this is a longer-term buying opportunity for Canada. But I think it's not time to leave the U.S. if you're a Canadian client.
But do you agree with sort of J.P. Morgan suggesting that this is a time to be tactically bearish U.S. stocks?
No, I don't, because number one, no one can time the market. Number two, we're investors, not market timers, and not traders. And so many people have said, Belsky, you didn't make any changes in your portfolio this month. Well, guess what? The names that I own in my portfolio are the names that I want to own in any kind of pullback anyway. I'm not going to try to outsmart myself. So guess what? I think that the names coming out of this, and it's really interesting, is that the market is performed the way that it should. Take your generals out first, then take the lieutenants out, which are generals were tech, lieutenants were financials. Now we're going after the other commissioned officers. So I believe from a near-term perspective, we're closer to the end than we were.